Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is June 11, 2024. This is a Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective to kickstart your trading day. Let's see what the charts are saying today, right now, where we're maybe going and where there is some problems or some technical levels that are in play that you might be interested in. So let's get started. Let's start by looking at the 4-hour chart, and this area right here between 1.0722 and 1.07346 in trading yesterday, the market moved down toward the high of that swing area. It was defined by the different number of different swing lows through here and swing highs going back in time to here. You can see how the market worked its way above and below that area before moving to the upside and finding that base right there, moving it to the high price right here. In trading last Friday, the price fell sharply after the U.S. jobs data pushing down lower and then back higher in trading yesterday after reaching this swing area. And trading here today, we're seeing a rotation back to the downside once again, and we are trading even lower. New low for the week in the current hourly bar and 4-hour bar, I should say, as well, and that's taking the price to the low of this swing area. If we break below the 1.0722, that should swing the buys more to the downside. The high price in trading here today fell short of the upside target, being the 200-day moving average. That's the green line in this chart. So sellers remain more in control below the 200-day moving average. Recall from not last week, but the week before, the price did base against the 200-day moving average and move to the upside. So getting below that level is a key barometer from a longer-term perspective, and it keeps the bias more to the downside. Now the question is, how far do we go to the downside? And this 107.22 level is going to be the first level to get to and through, or the next level to get to and through if the sellers are to take more control. Above that, if we do hold support, getting above the 107.53 or 54 type level. I know we were up above it yesterday and today, but getting back above that level and staying above that level would give the buyers off of this level more confidence for another attempt toward the 200-day moving average. So those are the key levels in play here. 107.22 is the one in focus right now. Let's take a look at the dollar versus yen, and we'll look at the hourly chart here. And if we look at the high or the trading today, the price did move up in the Asian session into the earlier European session, and in doing so, we moved up toward these levels through here, where we had resistance here broke above that level, formed an extreme up here for the month of May up to 157.70 level, and then rotated to the downside and started to use this area, or develop this area as a resistance level. The market rebounded back to the upside and found resistance sellers here before pushing to the downside in trading. I guess that's last week's trading all the way down to the 154.53 level before rotating back to the upside, helped by the employment report on Friday, which took the price back above the 100-hour moving average, back above the 200-hour moving average, back above this swing area through here, and that pushed to the upside off of that area through here on Friday and into yesterday's trade. We did come up to test this high price right here in trading yesterday and found willing sellers to the downside. But in trading here today, we have moved above that level again, but retested this swing area up here. Fell short of the 157.40 level just by a few pips before rotating back to the downside, and we are currently trading at 156.87. Yields are a little bit lower here in the U.S., which may be helping to downside here in the dollar versus yen. So in addition to the technical resistance holding, that may be a catalyst. On the downside, we do have to move back below this area right through here near the 156.52 to 57 level to increase the bearish bias. But just below that level, we have the 100 and 200-hour moving averages, which are now converged near the 156.40 level. 40 level is a key level also on the downside. On the top side, watch the 157.20 level. Finally, let's take a look at the sterling versus US dollar on the hourly chart. And what we saw in trading yesterday was a move to the downside that found support against this swing area here. Here you can see how that was a floor area more recently. Here for this pair with swing lows here. So it's a pretty solid floor on this dip right here. It's like, nah, we're not going down there again. We're going to move to the upside. Indeed, it didn't trade, but trading yesterday, the price did move down and tested this level 156, the high of the swing area at 126.85. The key level is also below that at the 38.2% retracement at 126. 75. Early buyers against both the floor and the 38.2% retracement that pushed the price back up to the upside. But we did find resistance yesterday against the 100 bar moving average on the 4-hour chart, and did so again in trading here today against that same moving average. Tried to move lower, but could not extend below this swing area here near the 127.10 level, and rotated back to the upside. And we are now trying to break above that 100 bar moving average, which should increase the bullish bias. But again, but we do have 100 and 200 hour moving averages, which are converged there at the near the 127.58-ish, 56 level on the top side. That's going to be a difficult nut to get to and through. However, if it does get through that level on the top side, it will open the door for further upside and tilt the bias up even more to the upside here. So, overall, while we remain in this sort of up and down trading range here for the sterling versus US dollar, but above the 38.2% retracement of the last move to the upside keeps the buyers more in control. Getting above the moving averages is the next key for the buyers to show that they even mean more business and want more control. So there you have it. A look at the 3 major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.